What's up, folks? I'm Davion, and this is Davion's Technical Analysis channel. In this video, I'll be your own personal guide into what you need to know to get invested in the stock market. Number one, you'll need a broker or a platform. If you've never had a platform before or a broker before, in the link below, I'll leave a Robinhood link and a Webull link that you can click and sign up, and you'll receive a free stock once you sign up. Choose which platform you want. There's also TD Ameritrade, Charles Schwab, the list goes on and on. Plenty of brokers you could choose from. Personally, I'll leave two links to Robinhood and Webull down below in the description. Number two, you will need capital. You can't invest in anything without capital. Then it's not an investment. You're just an onlooker, a window shopper. So capital, you'll need capital. The more capital you have, the more chances you have of either losing a lot more than you would with less capital or gaining a lot more than you would with less capital. It all depends on the trades that you decide to take. What type of trader are you going to be? Are you going to be a day trader? Are you looking for this as a set of income? Are you going to be a long-term trader, a dividends trader, a combination of both, options trader? You need to choose the path that best fits you and what you can handle, what you can tolerate for your risk. Me personally, I dibble and dabble in all of it. I like to trade options. I have a long-term portfolio. I also like to invest in companies that have or pay out a high dividend. And in my other videos, I'll give you a list of the companies that pay out a high dividend for you to look out for and invest in if you're interested in investing in being that type of investor. You choose what type of investor that you want to be. That's number three. Number four, if you decide that you want to be an options trader, this is for options trading only, then you need to go ahead and sign up for options trading with the platform that you choose to sign up with. If you click my link below and you sign up with Robinhood or you signed up with Webull, then you will need to ask them if you are allowed to trade options. Now, the only way that you will be able to trade options is if they approve you. I'm not for sure about Robinhood. I don't really have a good memory on that, but I do remember on Webull that I think Webull's asking for around 3 to 7 years of experience to get to start trading options on their platform. It may take a little bit of fabrication. I'm not telling you to fabricate. I'm also, as a little note disclaimer, not giving you any financial advice. This is not financial advice. Anywho, so you sign up for options. You told them, I'm a great options trader. I've been trading for 3 to 7 years. Watch out, nobody can see me. I'm coming. Boom. Looks like you're a trader. You're good to go. No. Make sure you know what company you're investing in. Personally, I always say with big tech, you know that's gonna survive, just like today. Tech went ape shit crazy today. Apple went ape shit crazy, hit all-time highs. Nvidia went ape shit crazy, they had earnings. And I'm not telling you to buy it, but I'm just telling you tech stocks. I'm giving you all the FANG stocks: Facebook, Apple, Netflix, Google, Microsoft, AMD, Nvidia, all the small monopolies, as I would say, which are high cap stocks, but I just like to say they're monopolies. So Amazon, those are all a good bang for your buck as far as longevity. You do know that Apple's gonna stay. You do know that AMD is gonna stay around. You do know that they're gonna obtain the weight that they've held and pull back minorly. Tech is a good buy. Now, when to buy? That is the most important question. You hear about inflation this, inflation that, this, that, oh, this, that. You don't know where to go. Is inflation possible? Yes. A little bit of inflation is good, a little bit. Inflation fears are out there. The Fed tapering rates, that is a scare as well. But the market likes for truthfulness. The market would rather hear that the Fed is gonna taper, in which you're a beginner, so you probably don't even know what I'm talking about. But all of this matters. So if you weren't into politics or you weren't into the government, then please get ready to get into politics and into the government, because these are things that you need to know to keep up with what's going on in the world. You need to keep up with a lot. Twitter is a big platform. You want to make sure that you're up to date with things that are going on in the market. You can get a regular person, a regular guy with 200,000 followers on Twitter, but still a regular guy. But that can cause shift in the market. It takes one person with enough capital to be able to pump and dump a stock. You want to make sure you know what you are investing in. If you came here because you've been on Reddit and you've been on WSB and you said, you know what, I'm tired of living this boomer lifestyle that I've been living, and I'm seeing all these young, handsome apes make money, and now I think it's my turn, then you come to the right channel. I will be elaborating on shorts and shorts over leveraging in the market, and where to find weak spots where shorts are over shorting stocks. So for the short covering, if they are forced to cover, then on that way up, or if there are any gamma squeezes, we play the gamma squeezes up and or that possible short squeeze up because shorts are over shorting. So if you are here because you are a mini ape and you are looking to be a full-time ape, you have came to the right channel. I'm very apish. I like to call myself a bullish ape. But that's for another video. So to get you started, because you just got here and you're a beginner and you want to start trading in stocks, you need to get a platform. 1, you need to get some capital in that platform. 2, you need to 3, decide what type of trader you're going to be. Are you going to be a day trader, a long-term trader where you look at the analytics and the fundamentals of a company and the price per earnings and the EBITDA and everything? And if you're going to be that type of trader or a high-paying dividend trader, whatever trader you decide you're going to be, you need to choose it now and get started on investing the way that you would like to trade. If you decide I want to trade options and I want to take that risk because the risk to reward ratio outweighs the risk, you always invest with money that you don't need. If you're investing with money that you need to make a full income out of this, please don't do it. That will cause you to panic. And that's another thing. If you decide to trade options and you decide that you like to trade options and you maybe decide to buy weekly and you get the rush of seeing how much money you can make on a weekly, remember that same rush also comes when it goes the opposite way. I promise you. But I'm here to give you the safest way to trade options as possible, but also be able to capitalize off of the market with this great strategy that they have with options, because you can make a lot of money with options if you strategically play it well.
The shit's chess, it ain't checkers.
Which leads me to number 5. Make sure you do not trade with emotion. Trading with emotion takes away strategy. Of course, you want to trade with a strategy. Oh shit! Oh shit! If you plan on coming here and trading without a strategy, then you're not going to be a successful trader. So you want to come up with a strategy, whether that strategy be you take some off the top once it takes over more than 5% of your portfolio, that's with shares, or if you're on options and you say, hey, I'm up, my strategy is I'm going to take profit at 30%. That's it, that's all, that's what I want to do. It's better to stick to that strategy. It doesn't matter if you miss out on thousands of dollars off that one trade because you had discipline and you stuck to a strategy. Trust me.
Oh, Jabroni, how do you feel about the match?
Well, I think it
doesn't matter how you feel.
It will come in better for you one day where those thousands that you miss out on a trade will make up for something that you would have used emotion and FOMO'd into on another trade or on another stock trade. It will make it up. Trust me. Discipline outweighs FOMO 10-1. So make sure you don't trade with emotion. And I know you're just getting started, so you probably are thinking, well, I want to be really emotional. I'm just getting started. But do not trade with emotion. Do not trade off of he say, she say. Buy the rumors, sell the news. Don't trade off of TV. Please don't trade off of CNBC and what they say and the boomers on there. Don't trade off of he say, she say. Do all of the research that you can and understand what the stock market sees a company's value as. That's it on this video, guys. If you guys want to see more videos like this, don't forget to subscribe to my channel. Hit the like button, comment down below, and until next time.